Wait, who's buying TikTok? Hi everyone, John with Dad's Options. This is portfolio update video number 2. If you didn't catch update video number 1, here's the deal. I'm building a $25,000 portfolio and I'm bringing you guys along for the ride. The past few days in the market have been pretty volatile, but we were able to make some money. Stay tuned to the end of the video and I'll update you on what the overall portfolio value is. So let's dive right in. I currently have 25 positions on, $8,544 of capital deployed. That's about 35% of the overall portfolio value. Goal is to get closer to 50%. In low volatility environments, probably want to shy a little bit farther away from that 50%, which means keep more capital on the sideline. When vol is high, I feel more comfortable getting closer to that 50%. We're in a higher volatility environment now, so the goal would be to deploy 50% of capital. We're about 15% away from that, so we'll continue to look for new positions to put on and manage these existing 25 that we currently have on. Overall portfolio delta is minus 15, theta is positive 51. Extrinsic value is $2,938 of extrinsic value. Equities probability of profit is 74%. Again, that's 74% on all my positions except for the small futures, the small future dollar, and the small technology future. The rest of the other 23 positions would all be calculated in the 74% probability of profit. All right, looking at positions I put on since the portfolio update number 1 earlier this past week. KRE, which is the banking ETF, sold a call. It was one of the few stocks that was up on Friday, so I went ahead and sold a call just to really pick up just a little bit of short deltas. The market's been the past 2 days been on sell-off, so I lost a lot of my short deltas, so thought that KRE was a good opportunity to pick up some short deltas since it was up on Friday. Next position is SMH. SMH, I put on a short call spread, short the 176 call, long the 179 call. Picked up $1, which is 1/3 the width of the strikes. Right in my ideal risk profile there. The third position I put on is SLV. I wanted to get long SLV. Was planning on selling a single 24 put. The buying power requirements in SLV, although it's a $24 stock, basically, it was very high, so I went ahead and bought a farther out of the money put. I have $375 of risk on this trade, and yeah, just bullish on SLV. The fourth position I put on is Oxy. Realized I didn't have any oil exposure in this new portfolio, so went ahead and sold a strangle, a 10-15 strangle in Oxy. The buying power was actually fairly favorable. It is a very small stock, so the buying power was favorable. Went ahead and sold 2 of those contracts, and we're just hoping that Oxy stays in a range for a little while and we can take a 50% profit out of that trade. QQQ. QQQ was was the only closing trade I had. I closed the 313, 316 short call spread. Obviously, the big sell-off the past 2 days in the market helped that cause. So, went ahead and sold that for bought that spread back for $46 debit. That's over 50% on that trade in just about 3 days. So that was a really good trade. I went ahead and put on a new position in the Qs. I put on a call side broken wing butterfly where I bought the 305 call. I sold 2 of the 310 calls, and then I bought another $320 call and did that whole trade for 36-cent credit. I liked how that set up. It kept my directional bias there in the Qs. If the Qs continue to sell off, now just collect my 36-cent credit and call it a day. If it doesn't, if there is a rebound, and hopefully it's we just get tested here close to the 310 strike, and max profit could be in play. The last trade I did this week was VXX. I did a $10 wide debit spread. This was a opportunity for me to get long volatility going into this long 3-day weekend. Not really sure where the market's going to open up on Tuesday, so thought I would put on a position where I could capitalize if we do have a big sell-off again on Tuesday. This set up pretty nicely. It's a $260 debit. That's my max risk, my max loss on the trade. I can make up to $740 if we do have a large move in the next 41 days in volatility. So that trade set up pretty nicely. So that's all the new trades and the one closing trade I have. Just kind of taking a brief glance at the overall portfolio. Tesla comes to mind right off the bat. It's just that that trade is kind of jumping all over the place. It is a put side broken wing butterfly. Again, the goal with this would be to be able to roll this 415 put and roll that up to the 420 put. All those familiar with Tesla know that that's kind of funny in and of itself, that 420 put. But so looking to roll that up to the 420 put. I won't have any risk on at that point if I can do that. Roll that put up for a debit of less than $215. You can see here the mid price. I have a working order in for that. I'm trying to take $1 out of that trade. So a couple things, I'd like to give myself an opportunity to make $1 on that. If this gets close to 215 and it doesn't look like it's just going to kind of blow past that, I will probably manually do that, because I would like to take all the risk off the table, albeit I think I only have $265 of risk or something like that on this trade. So that's Tesla. The rest of the positions, we're early in the cycle, so we're not seeing too much movement as far as theta or time decay coming out of these options. The last 2 days were a pretty big sell-off, so volatility got bid up a little bit, and then we saw a little contraction later into Friday afternoon. But so I'm just going to keep monitoring the positions. Again, I'm at 15. I need about 15% more capital deployed. So this coming week, after Labor Day, I will be looking to put on a couple more positions. And again, I'm trying to stay within the 1 to 2% range of each trade. So that's, in a $25,000 account, that's under $500 per trade. And again, I want to put on as many trades as possible to capitalize on just a little bit of edge on each trade, and just keep doing that over and over again. And hopefully we can build the portfolio. So that's all the new positions, and now the moment we've all been waiting for. The portfolio value is $24,489, which is still down $511 from our starting value of $25,000. We are up $267 since our update last week. If you like these update videos, please like the video, subscribe to the channel. My goal is to grow the channel, which will help me keep doing these updates. If you want to see some of the trades broken down in depth, you can go to dadsoptions.com and click on the trade blog. All right, well, that's it. Happy Labor Day weekend. See you next week for another update. Happy trading.